President Obama came to the BRT a couple of times, and at one point he complained that you guys tell me how bad it is with China, and when I go there, they tell me how great it is. None of you are willing to stand up or say anything, and I think that's true. I think the business community had spent a lot of time, let me just worry about JPMorgan China, not, otherwise the Chinese could be punitive, or something like that. And now the BRT supports not the tariffs, but the issues, okay, about IP being stolen, non-bilateral investment rights, subsidies or benefits given to state-owned enterprises beyond what you consider normal or fair in trade, non-tariff barriers where you get the right to do it, but you can't get the goods into the country. Those are serious issues that Japan, Europe, and America, we all know are true. I think the Chinese know it's true. So we're glad. I think Lighthizer and Mnuchin have been doing a good job. I'm told that they made a huge amount of progress in detail. We don't want a soybean deal. If they agree to buy $200 billion of goods a year from us, that doesn't fix the problem. And Europe, and we're not courted, but Europe and Japan really want us to do this. We should have been part of TPP. So I wasn't in favor of the tariffs and the threatening and the stuff like that, but absolutely in facing the issue. And in fact, the business community is on the other side. Our view is if you got to deal with the serious issues. And if you don't, we're better off dealing with it now. And whatever that means for the economy.
Now you have your.
And I think they're going to do one. I think both parties want it, but I also think it's a bad idea to say they have to. They don't have to, nor do we have to.
You have your pulse on the your pulse on the U.S. economy. You see all the data for credit card companies that you own and so forth. What do you think the state of the U.S. economy is? Do you worry about a recession anytime in the near future?
Not really, because if you look at it, and again, so China's going to grow at 6% because they can macro manage in ways that they do, because it's a state controlled and their companies, they simply can do monetary policy, fiscal policy, bank policy, industrial policy. You hire, you train, you build the road, and they will meet their objectives of 6% growth. It's not great growth. They're building imbalances in the system, which I think will eventually come to haunt them. But for the next couple of years, they're going to hit their targets. And then Japan's doing 1%, Europe's doing 1%, Brazil's turned the corner. The United States, it's chugging along, and forget the noise. And remember, all this geopolitical stuff affects markets and sentiment and all that, and obviously you see what it does in the fourth quarter, but employment's going down, wages are going up, confidence is high, but it's not the highest point. It was at almost the highest point of all time. Business confidence, consumer confidence, and now it's still in the upper quartile. I think it's coming down because of the shutdown and trade and Brexit and a bunch of stuff. Housing's in short supply. You don't have the leveraged assets in the system like we had. There's nothing like we had before. It doesn't mean you can't have a recession. So my view is this economy is plugging through, and Brexit, Venezuela, Russia, possible fiscal policy tightening, possible bad policy errors, which I talk about in there. Those are mounting issues which can easily derail an economy, but this could be more like just more straws in the camel's back. Some combination of stuff affects confidence, affects CEO spending, and so we don't see it now. But you got to be prepared. We all should be prepared for something bad to happen because bad things tend to happen. So, but it could easily be 2022. This notion it's got to be 2019 or early 20. That's not true.